Let's get some fundamental check also on the market. Ruchit, coming to you, Ashish was mentioning about the banking stocks. Clearly, they have been the leader in the kind of rally which we've seen from this year. Going ahead, what's the outlook on the markets, and where do you see which sectors will provide most amount of gains?
Yeah, hi, good morning. Well, more of a similar view to Ashish. We are expecting the Nifty to continue its positive momentum. Firstly, if we observe, I'll just give a small technical view that in this calendar year, during the first week of January, the Nifty index had given a breakout above the 20 days exponential moving average, which is a very short to medium term moving average for our markets. And since then, on every corrective move, the 20-day EMA has acted as a very strong support, and Nifty has not yet closed below in this first 3 months of this calendar year below the 20 EMA. Now, the recent low, which was around 9,000, the 20 EMA is placed around 9,000, the parabolic SAR is placed around 9,000, and also the recent low of this corrective move. So I think the base of our markets have now shifted higher to 9,000. It's very difficult that unless the markets go below 9,000 now, the undertone will continue to remain bullish. And whenever the markets or any of the stock trade at its all-time high, it's a reciprocal retracement of the previous correction through which we come out with the targets. And these are indicating targets around 9,400 to 9,600 in near term. At least in this month, in the month of April, we can expect the index to move higher towards 9,400 levels. And on the lower side, 9,000 would become a very strong base. Now, as far as other sectors are concerned, rightly said that Bank Nifty has seen a good outperformance in this last couple of months, and we believe that going ahead, the kind of the volumes that the banking stocks have attracted in last couple of weeks are indicating that this bull run in the Bank Nifty, or this outperformance in the Bank Nifty and its components would continue to do so. Even PSU banks has attracted quite a good volumes in the recent past. SBI, after a consolidation phase of about couple of months, have given a breakout with good volumes. Even Bank of Baroda has consolidated around its good support of 200-day simple moving average. PNB has seen a good up move with volumes. And on the private sector banks, the private sector front, we are seeing a good momentum in HDFC Bank as well as other names such as Kotak Bank. So now these are most of the heavyweights of the Bank Nifty index. So I think that this Bank Nifty and PSU banks would continue to outperform the broader markets. And on the Bank Nifty front, we are expecting levels around 22,000, somewhere around 22,900, and in at least 2 to 3 months of time frame. So definitely the undertone for the markets would continue to remain bullish. 9,000 has become a very strong base now. So long positions should be made even at current levels with stop loss below 9,000, and expecting target of 9,400 to 9,600 in very short term.
All right, Ruchit, thanks very much for getting us those technical checks. Gentlemen, hold on. We'll go across to a fundamental analyst now. Arun Kumar, who's a market strategist at Quant Global Research, joins us now. Good morning, Arun. Appreciate you joining us today. Well, it's been a great ride for our Indian markets. Last day of the financial year as well. We've seen good gains coming in from Nifty as well as a Bank Nifty contributing nearly up about 33% in this financial year. What's the road ahead for the markets? What do you think can derail our markets at these levels?
A couple of factors are in. Today is the last day of the financial year, and mostly we have seen that during the last day of every quarter or financial year, stocks have a tendency to move up. We call it typically NAV management days. Okay, the bigger question will be how post 31st how the market will play out. And looking at various measures, internal measures, we feel that there will be an amount of caution which will play out. People will be cautiously long during the beginning of next quarter as results kick in, and various trend measures also reach their peak point.
Right. Arun, what's your view on the banks? Because public sector banks as well as the private ones have been the bigger contributors to this rally, even if you take a look at the one-year perspective or the lows from December onwards. Do you think there's further strength on the index, and where do you think the greater contribution will come from? The larger ICICIs and HDFC banks of the world, or put together incrementally with the PSU pack?
Put together incrementally with PSU banks, because PSU banks have just started firming up and the setups are fairly good. I think on Bank Nifty somewhere around 2200, 22,900 maybe possibility. Sorry, 22,000 to 22,900 is quite possible.
22,900, that's the target on Bank Nifty. Yesterday, it touched fresh record highs for our market, and the PSU banking index has been doing pretty good. In fact, yesterday, it was up for the sixth straight session. Arun, I just want to get a sense on metals as well, which has performed really well in this financial year. And, well, the commodity cycle, I believe, turned, and that's the reason good gains were seen for the likes of Hindalco, which is up almost 160% in this financial year. What's the road ahead? Anything that you like in this space?
See, most of the metals we expect it to continue. Maybe the momentum may be a little bit lower than what people are expecting, but there is no trend damage as of now. So we stick to the long strategy over here.
Right. From the mid-cap pack, Arun, will there be any counters that are in focus? I mean, we've seen agrochemicals doing very well over the year, and even certain other pockets, auto ancillaries, for instance. We've seen a recent hit on OEMs that has come through because of the sale ban as far as BS3 vehicles is concerned. But something from the mid-cap basket that excites you?
Auto ancillaries as a group, specialty chemicals as a group, they look quite good.
Right. Arun, taking that point forward of broader markets, as Pranoy was mentioning, there are a lot of themes, in this market which have worked out. You have the rice stocks which have done pretty well. In fact, last week was all about the paper stocks where a good amount of gains were seen. And you were mentioning about, the chemical stocks. We've seen good amount of gains coming in there from that space as well. But tell us, from current levels or going ahead from here, what is one theme according to you which may work out the best?
I think I'll still feel that specialty chemicals, especially the frontline names like Tata Chem and all, they're all the setups are really good, and we like this space. We are sure that there will be more upsides over here during the course of year.
Arun, any stocks that you like, from if somebody had to put money at these elevated levels in the market, what are the stocks which you like, if you could share that with us?
See, as far as chemicals are concerned, I'll still go for Tata Chemicals among the frontline names. And PSU banks, SBI is there, Can Bank is there, Bank of Baroda is there, PNB is there. So these are fairly good names.
Fair point. We're going to leave it at that, Arun, but appreciate you joining us with your quick take on the start of the new financial year and how the series has been and what the outlook is in terms of stock-specific action as well. We'll take a very quick break. On the other side, we track pre-open as well as the rupee opening.
Welcome back. You're watching a Dealing Room with us on BTVi. Ashish, the media stocks of late, they've been doing pretty well. They don't have a lot of weightage, I'm sure, on the benchmark or the other indices. But a stock like Sun TV, which of late touched its record high level, some kind of correction has been seen. There is Eros Media, Inox Leisure, all these stocks have been doing well. Any stock, technically, according to you, which one can look to enter at these levels?
So yes, the entire space is looking quite interesting. Now, as far as Sun TV is concerned, we feel that, already the stock has delivered almost 59% up move in last 1 year. But if you look at, the kind of consolidation the stock has seen over a period of last, 7-8 years, it gives me a sense that, any dip would be a good opportunity in Sun TV, and this stock has a potential to cross even 900 levels. As far as Z is concerned, again, this is one stock which has been consolidating near its all-time high. So again, a stock poised for a move towards 600 odd levels. In the mid-cap space, UFO Movies is one stock which looks very interesting to me. Stock has seen a very strong, volume participation at a lower end of the range, clearly indicating that a lot of long accumulation has happened. We have seen an uptick in the delivery volumes. I think this is one stock which is poised for another 15 to 20% upside from current levels. In terms of risk reward also, I think UFO Movies at current juncture looks very, very interesting.
All right, Ruchit, let's come to your strategies then. You have buy calls on Union Bank, Castrol as well as GNFC. Take us through those, and if you can possibly share the time horizons as well.
Yeah, so first pick is a buy call in Union Bank. As I said earlier, also we are expecting the entire PSU banks to continue its outperformance. Union Bank is one of the stock which in last few days after a corrective move has taken support near the 89 EMA on the daily charts, which usually acts as a very strong support during a trended move. So I think this is a good opportunity. The risk reward is also favorable. This is just a short-term trade for about 1 week's time frame. One can go long around current levels, keeping stop loss below 151, expecting target around 163. Second pick is a buy call in Castrol. Recently, we have seen a structure, high top, high bottom structure getting formed in the Castrol, and after a consolidation phase, and again the stock is has indicated resumption of this of the short-term uptrend. Now, in the recent consolidation phase, all the short-term as well as long-term moving averages have consolidated. The 5 EMA, 20 EMA, 89 EMA, 200 days simple moving average. So all the set of moving averages has seen a consolidation, and usually after such a consolidation phase, whenever the averages tend to move higher, that indicates a probability of a trended phase. So from 1 to 2 weeks of time frame, one can go long on Castrol, keeping a stop loss below 417 and expect target around 451. And last pick is a buy call in GNFC. Of late, we have seen a good outperformance from this stock, and also the entire fertilizer sector as a whole have been showing a good momentum along with increasing volumes. So GNFC, after a consolidation of around about a month, and has about a 1 month, has again resumed its uptrend in yesterday's trading session. If we draw the trend line from the recent highs, then the trend line breakout is also there with good volumes. This is indicating that the broader degree uptrend which is there would tend to continue. So one can go long in GNFC also, keeping stop loss below 270 and expect target around 298.
Watch out for all these three stocks. Ruchit has a buy call on Union Bank, Castrol, as well as a GNFC. Well, the other space which was buzzing in yesterday's trading session, in fact, yesterday your top sectoral gainer was the Nifty Realty Index, which was up about close to 2%. Ashish, India Bulls Real Estate was up about 8%. You had the likes of HDIL, which saw a good amount of gains. Anything from this sector where you see any possible trades in the near future?
I think India Bull Real Estate would be the pick, because if you look at, after a very long time, the stock has seen this kind of volumes being developed in the stock, and we have seen a considerable amount of open interest in the stock. In terms of rollovers, also the entire space has seen a very positive rollover, so that is also a sign of comfort. Now, this was after a long time, this was the first uptick which was seen, so I think there can be some profit booking after, because that was a considerable move which we saw yesterday. In next 1 to 2 trading sessions, if there is any dip which comes in and the stock comes around 84, 85, that would be an ideal area where one can re-enter the stock. I think this stock has a potential to cross 100, 105 levels in coming days. So I think positionally this stock looks good for another 15 to 20% upside from current levels.
All right, we will be getting you the pre-opening rates. The market will be opening. You'll get the pre-open rates in just over a minute. Meanwhile, we've also got Sanjeev Bhasin, who is the EVP Markets and Corporate Affairs at IIFL. Good morning, Sanjeev. Thanks very much for joining us. Well, it is the last trading day of this financial year. It's been a good year in terms of equity markets. From touching those lows in December, we've scaled almost 1,200 points higher on Nifty. What's the call on the markets from these levels?
Well, good morning. Yes, so we've climbed a lot of wall of worries, and now the foreign flows and domestic inflows seem that we are headed higher. So I think 93, 93.50 could be the immediate shot in the next 2 weeks. We'll take it from there as results play out. But yes, this is a very strong global rally, and India may be a late incumbent, but it has definitely played catch up. We think 93.50 or 9400 maybe can be on the extreme side where the stretch lies. It will all be about stocks and sector specific in the next 2 weeks.
All right, gentlemen, hold on. We'll be getting the pre-opening rates for you in just about 26 points. Meanwhile, let's take a look at SGX Nifty. That's actually recovered from a day's low. We were looking at a cut of about 15 to 20 points on SGX Nifty when we started the show, but currently it is showing a downtick of about only 5 points. So 91.90 is the level which is being indicated by SGX Nifty. It's been a good series. In fact, the last 3 series for our markets have registered good amount of gains, as we were mentioning. mentioning from December. We are getting the initial rates there for you. The market, those are the pre-opening rates. Nifty suggesting a cut of about 31 points, but let's not read too much into these numbers because these rates will be settling down. You've got HDFC Bank, which saw a huge amount of delivery-based buying in last half an hour of trade, and supposedly by the domestic institutions, as we are seeing a lot of NAV management which is coming as the financial year ends. So that's HDFC Bank recovering. Sensex has opened in the green, and let's also pull up a couple of your aviation stocks which could be in focus, especially SpiceJet. Well, the news did come about during the market hours yesterday, but let's see if there's any kind of reaction coming in there. Kotak Mahindra Bank, once again, SpiceJet is showing an uptick. Let's also see United Spirits, because we had the Supreme Court order coming in yesterday on the alcohol shops, which the order came about. You're not allowed to have any shops within 500 meters proximity on any of the highways. So United Spirits could see a little bit of pressure coming there about, but let's see where the actual rates settle down. So Sensex as of now trading just about higher by 60 points. Nifty is seeing a cut of about 19 points. We'll wait out for a few minutes. We'll get the final rates by 9:08. Sanjeev, coming back, well, you know, the banks have shown a clear leadership. If we have to see those gains on Nifty, the bank Nifty is up 33% in this financial year. Do you see this leadership, you know, continuing? Because especially the PSU banking space has been buzzing in the last few trading sessions since the time Finance Ministry is, you know, meeting the lenders as well as RBI to resolve that NPA issues. What's the road ahead? Would you be a buyer in any of the PSU banking stocks?
Well, we've had a big buy on State Bank all the way from 170 levels. We continue to be overweight. We think 325 in the next 6 months is on the card. However, as a caveat, the speed at which it has recovered, even that could be superseded to 350. Union Bank and Bank of Baroda are two other picks which we have. And we've recently upgraded Indian Bank on the back that treasury profit this quarter could also surprise on the upside. On the banking as a whole, it's the conduit for credit expansion in the second half, which can be in strong double digits. And I think we've known that the banking system is awash with funds. So even though yields and treasury profit may have peaked, we think credit expansion on both the corporate and the retail side could be the kicker for the banking industry.
Right. In fact, your favorite pick, Indian Bank, is included in F&O from today. So we could see some kind of action coming in there for Indian Bank in today's trading session. Sanjeev, two sectors which have clearly underperformed in this financial year, namely IT as well as pharma issues. There are a lot of concerns coming about, you know, from a US regulator for both these sectors. The valuations currently look pretty much subdued, or call it cheap. Would you be a buyer in any of the stocks among these sectors?
Yeah, so the other, negative for them is that now the rupee is become very, very strong. And if that was a tailwind previously, it's now become a headwind. However, we have a couple of picks over there. Sun Pharma on declines closer to 650 becomes very, very attractive. We've also recently upgraded Lupin to our overweight. We think Lupin can surprise on the upside and should be one of the better performing large cap stocks on the back that their pipeline in FDAs for the next 2 years is very, very strong. On the IT front, we like Mindtree and we like Wipro, where we think an inordinate buyout or a buyback can be on the cards. Even though the stocks have run up, we would recommend any decline to be a good buying opportunity. On Infosys and TCS, we would wait for more language from the results and what the road ahead is as per the management.
Ashish, coming on an Axis Bank, you had a lot of euphoria in and around this one, especially at the start of this week. Of course, a bit of a dampener coming in from Kotak Mahindra, no merger over there. And trade reversed yesterday. What's the outlook on an Axis Bank? What would you advise investors?
So again, I think it will go into a consolidation. It was trading in a consolidation range, and then post this news, we saw some activity happening. Those positions, as you rightly mentioned, got liquidated, and now I think a fresh trigger needs to be seen in the stock. So I don't see any major activity happening in the stock. My preferred bet within the private sector banks would be HDFC Bank and Yes Bank. RBL is one stock which we have been recommending, and I think that will continue to ride the trend in the private sector banks. As I already mentioned that, the good strength will be seen in the entire PSU banking basket, and within that I think SBI, PNB, Bank Baroda, Canara Bank, this stocks can see reasonably 10 to 15% upside in a very short span of time.
All right, so the outlook on the banking space remains bullish, be it on the charts or fundamentally. Ruchit, coming to you, well, talking about the IT stocks which have been underperforming, just want to get a chart check on a couple of these large caps like Infosys, which has been underperforming in the last few trading sessions. Do you see any kind of trading opportunity in this space?
So firstly, if we have a look at the Nifty IT index, then although we have seen some underperformance vis-a-vis the market returns that in last couple of months, but I think this index as a whole is indicating now a broad consolidation phase would be happening in this. On the downside, 10,500 would be a very strong support for the index, where a couple of good long-term moving averages are placed, and on the higher side, 10,900 to 11,000, which we have recently, would continue to act as a resistance. So we are not expecting any major momentum on either side coming in the IT index as of now. Yes, there would be more of a stock specific move within the index, so one should now focus on the stock specific moves rather than taking a directional move on the entire sector as a whole. Amongst the stock, I think TCS would be one of the stocks which could show good outperformance and could move higher in near term. If we observe the last couple of months of trading activity in this stock, then the prices had given a breakout about 2400, which was the earlier resistance during the month of February. Now again, last few trading sessions, we have seen some sort of correction, and the earlier resistance of 2400 is now acting as a good support. We have 89 EMA as well as 200 day simple moving average place around 2400. So I think this stock could be one of the outperformance, and we could see again levels around 2570 coming in the stock. Apart from this, amongst the mid cap names, Hexaware is one of the stock which could show good outperformance once this consolidation phase is over. On the weekly charts, definitely the stock has taken a good support around 200 weekly moving average in the recent past and shown a pullback move around 210, 212. If the stock comes, then again that would be a good buying opportunity. So we are not expecting the entire sector to show any directional momentum in near term. There would be some consolidation in the IT sector as a whole now. So one needs to be very stock specific if anyone is going to trade for a short term, at least in this sector.
Right. Sanjeev, I'm coming back to the banking space. Just want your view particularly on a Kotak Mahindra Bank. So, like I said, bit of an anticlimax with regards to the news that came in versus what the market was expecting. But this strategy of theirs, it's a very aggressive one. Cost of acquisition of these customers will not be very high. That's what Uday Kotak said. But fact remains that they're trying a bit of a geo play at the moment. Go ahead, get those customers in, and then possibly look to monetize that later. Geo, the figures are still doubtful as far as the prime membership is concerned, but do you think Kotak Mahindra Bank will be successful in going with this strategy, considering that there would be significant costs involved? You had the SBI chairman recently say that zero balance accounts are a big weigh down factor on their balance sheet. Do you think Kotak Mahindra Bank would be able to give you that kind of outperformance with the kind of strategy that they're now adopting?
Yeah, well, it's telling you that even a laid-back bank, not a laid-back or a very, very apprehensive bank like Kotak is now getting aggressive. So it's telling you that there is definitely pressure on NIMs going to come in the next 6 months on the back that there is going to be retail side pressure from the PSU banks and treasury profit may have peaked. So like you said, the zero balance and promising 6% on savings account will not be easy to be met. But, given the buffer they have, the excess capital on tier 1, tier 2, it is maybe a good time for inorganic buyout. And I would expect that this strategy will have mixed results. We think the stock is fully priced. We think maybe it can be a market performer to slightly underperformer. But given the extent of the strategy, only time will be, only time will tell how it has played out. Like you said, I think the pros and cons weigh out in favor of each other. And given that banking sector is awash with liquidity, it's how well you can park that is going to be the stance by most banks.
And it's pretty interesting, Deep. In fact, 811, that's the product which Kotak Mahindra Bank has come out with. Some of the reports are indicating that, it could compete with Payments Bank. And interestingly, Kotak Mahindra Bank has 19% stake in Airtel's payment bank. So let's see how that pans out, whether doubling of the customer base by just opening zero balance account works for Kotak Mahindra Bank or not, because currently their balance sheet is pretty much strong. And yesterday, the fundraising which they announced will bring down the promoter stake by about 1%, which will now stand at about 31.1%. So Kotak Mahindra Bank continues to be in focus. It closed at levels of about 865 yesterday. Ashish, coming to you, there are a lot of F&O inclusions. In fact, first time I'm seeing such an exhaustive list coming from National Stock Exchange, almost 15 stocks coming there about. Are you surprised with the like of Suzlon being included there?
So not really. So if you look at, there are a lot of stocks where the liquidity is low, and still those kind of ideas are being included in the F&O list. But if you look at the kind of volumes, the kind of liquidity, and the kind of market cap Suzlon is having, I think this is one stock which is a fit candidate for F&O traders. And in terms of our top picks in this entire 15 stock basket would be Indigo, which is into the airline segment. And if you look at last time also we discussed about SpiceJet. It was trading around 74-75. I think we are seeing a very strong undercurrent in the entire airline stocks, and within that Indigo is one stock which looks very, very interesting. I think this stock has a potential to give you 15 to 20% upside in a short span of next 2-3 months. And I think this stock's inclusion in the F&O space is good, because if you look at most of the time Jet Airways is in a ban period, so you don't have another choice to initiate a long position. And if you look at SpiceJet, it is into the BSC segment, so you don't have the that is again not available in an SE. Yeah, so I think this Indigo's entry into the F&O space will give a good access to a lot of traders to take a bet on this rising sector. Second would be a long idea on Suzlon. Now if you look at Suzlon, we have seen a considerable amount of delivery volume picking up in the stock from 15 to 19 levels, but after this getting into F&O space, I think there will be a good amount of activity which will be seen, and I think this stock has a potential to give you 25 to 30% upside from current levels in next 2-3 months. So I think Suzlon looks good for 27-28 levels on upside, and can be initiated as a good positional long idea.
Right. In fact, that's a very valid point that you raised there, Ashish, about Indigo and how it becomes a very valid F&O play for the markets. Ruchit, come in on the airline counters. You also have the regional connectivity boost coming in for us, a couple of names over there. How are you playing the aviation stocks, Jet, Indigo, as well as SpiceJet?
So definitely the trend for all these stocks continues to remain up. Already we have seen a good consolidation phase after a corrective move, consolidation phase of 2 to 3 months. And usually after a correction, whenever such consolidation phase takes place, and again the stock starts moving higher with volumes coming in, that's a sign that the accumulation has been done, and now it's time for the it would be time for a trended up move. So similar kind of trend we have seen in Jet Airways, SpiceJet, as well as Indigo. Definitely these stocks have attracted very good volumes in last couple of weeks, which is an indication that this may be start of a new trended up move, and we could see significant higher levels in coming days. Yes, stock specific, we can see a good outperformance in Indigo going ahead, because after a consolidation phase, the stock has given a good breakout. Once it start moving higher above 1075, I think the stock has potential to even go up to 1200 levels. So we are positive in this space, and Indigo would be our top pick, which could show a good outperformance within the sector.
All right, Indigo is the top pick among the aviation space. The stock has given you returns in the last 1 year, and well, let's see, today's pre-open is also suggesting a positive opening. Sanjeev, talking about the metal space, which has surged sharply. In fact, the Nifty Metals Index in this financial year has given the best returns of about 60%, but this is a commodity-based cycle. Just because a commodity cycle turn, it augured well for the Indian metal companies as well. Are there any stocks in this space that you would be watching out for, because Hindalco has given good returns in last 1 year?
Well, yes, the stocks are more than doubled, and from their lows of February, where last year of this year where we put out a very big buy, They have been outperformers. So for us, the pecking order remains Hindalco, Tata Steel and JSW Steel on declines. We would also add a Vedanta again on declines, because that becomes a very good proxy after the merger and the consolidation with Kane, because oil prices have now stabilized here. If any uptick, that could add to the balance sheet, but only on declines, because this is now proxy to the dollar trade, and we've seen the dollar consolidate stroke weaken in the past few weeks. If any pressure comes there, then these stocks could see profit booking on higher levels.
Right, Sanjeev, just hold your thoughts there. It is the last trading day of FY17. Let's see where markets open at. It's been a good year for the markets, 18% of an up move coming in the last 1 year. And at the moment, you're seeing a quiet start, holding at 91.50 for the Nifty right now. Let's pull up the two new Nifty inclusions, IOC as well as India Bulls Housing Finance. Those will be the big stocks in focus. In fact, IOC has already seen a smart gain in the last 1 year of about 60-odd%. IOC, 95-odd%, sorry, on an IOC. It's just about 0.6% up in trade right now. India Bulls Housing Finance not doing much. A sharp run-up has come in on India Bulls Housing also in the last 1 year, up about 52%. Pull up a BHEL and Idea as well. Consequently, they go out of the Nifty today. A strong reaction coming in trade yesterday, and not much happening in trade at the moment. You have HCL Tech, that's your top gainer on the street at the moment, up by about 1%. RIL also participating in some way in today's rally, up by about 0.7%. Today is the deadline for the Prime membership plan over there. Tata Steel, as Sanjeev was just mentioning, one of his top picks, that's up about 0.6%. Coal India, Power Grid, DPCL, Aurobindo Pharma, Adani Ports. Not much action happening really on some of these large cap names at the moment. HCL Tech is the only one that's showing an uptick of over 1%. Otherwise, it's pretty much muted all across. Advanced decline ratio also pretty much in a 1:1 ratio. Bharti Infratel, that's down by about 3%. Reports coming in this morning. They're eyeing Vodafone's 42% stake in Indus Towers. So we'll keep a close development on that. HDFC Bank losing about 1.5%. In fact, the Bank Nifty counters are down by about 0.5% at the moment. IDFC, Axis, Kotak holding out in the green. But pretty much all the other components are lower, led by the HDFC twins. Cipla down about 0.5%. ITC on the back foot, as also a Wipro. India Bulls Housing, as I just mentioned, amongst the top losers at the moment, but not much of a downtick coming in. Hero Moto, IndusInd Bank, Tech Mahindra, M&M, all of these seeing a marginal downtick. Navneet, no real action as far as the large benchmarks are concerned at the moment. A bit of a cautious trade as we go into the weekend as well. Start of the April series, start of the new financial year next week as well. So traders pretty much on the sidelines, at least at open right now.
That's right, Deep. In fact, they may not want to take fresh positions, as it is the last trading day for the week, also for the financial year. And this is a Bank Nifty actually which is dragging the index lower. Pull up the HDFC Bank, that's down by about 1.5%, and that's one stock which has got almost close to 9% weightage on Nifty, and that's the reason you're seeing that fall coming in on Nifty. Even both these stocks, HDFC, Punjab National Bank, went up in last half an hour of trade yesterday, and some kind of profit booking has come in for these stocks. Even your large cap stocks like ICICI and State Bank of India are pretty much weak, but nevertheless you could expect some profit booking, because Bank Nifty had touched fresh highs in this week. From the broader markets, better than the benchmark indices. The advanced decline ratio, National Stock Exchange, is pretty much good. It's in favor of the advances, about 2:1. So your top gainer on the mid-cap index is Jindal Steel and Power, which is trading higher by 2.5% on back of that news, where promoters will be infusing some kind of funds into the company, on back of which you're seeing some kind of positive reaction coming on the stock. Indian Bank, which gets included in the derivative space today, has reacted positively. That stock's trading higher by 1.6%. You've got Nalco, which is trading higher by 1.5%. Adani Power, Max Financial are a couple of your counters which are doing well. From the small cap index, that too is trading in the positive territory. Yesterday's outperformer small cap index yesterday was up about 1%. You've got the likes of Arshia, your usual counters you get to see on the top, Arihant, Arshia, Alankit. Chambal Fertilizer is doing pretty much good. And on the flip side, from the broader markets, there are a couple of losers. Let's quickly take a look at them. Torrent Power, which was up yesterday, is seeing some profit booking. Bajaj Holdings, ABB, as well as 3M India are trading in the negative territory. Well, there are some exclusions and inclusions in the mid-cap, Nifty mid-cap index as well. So let's look at Hexaware Technologies, which is being excluded from the index today. Hexaware, let's see how it is trading today. Hexaware is seeing some kind of negative reaction. You've also got Petronet, LNG and RAC. Both these stocks have been excluded from the Nifty mid-cap index. Hexaware is trading lower by just about 0.5%. Petronet, a positive reaction seen there. And a couple of your inclusions also. Keep an eye on Apollo Hospital Enterprises, Bharat Forge and Castrol India. All these three stocks, they have been included in the Nifty Mid-Cap Index. You could see some positive reaction for Apollo. Bharat Forge has seen some minor gains, and Castrol is trading higher by close to 1%. And even from Bank Nifty, Bank of India has been excluded from today, and you've got IDFC Bank, which has been included in Bank Nifty. So all that recheck in the in these indices you'll get to see today, and a couple of your reactions, but mostly it should have been priced in because the announcement had come in way before.
That's right. Just looking at some of the big gainers that have come in over the last 1 year, and like I said, IOC up about 90%, but Hindalco, and Sanjeev was also saying this is his top pick, 116% up move. Yes Bank 79%, Maruti 60%, Indiabulls Housing, the new Nifty inclusion 52%, and SBI at 50%. So all of these have been strong performance. In fact, all banking stocks are in the green on a 1 year basis. The underperformers have also shown significant gains. Axis Bank is up 13%, Bank of Baroda 18%, ICICI Bank 19%. The top gainer, of course, is Federal Bank 95%, PNB 81%, and a Yes Bank 79%. Ruchit, have you spoken metals to Ruchit? Ruchit, just comment on a Hindalco. What's the gain? What's the outlook over there? 116% up move on a 1 year basis.
Yeah, so if you compare year on year, then definitely the entire metal space has given a good have shown a good outperformance. But last couple of months we have seen a good consolidation phase has also happened in this metal space. So usually that's in fact a healthy sign that after a decent up move we have seen a good consolidation of 2 to 3 months. And usually if this is a bull market, then the sector which has started outperforming before the start of the bull market, then that would be the sector which would tend to outperform in the entire bull run. So I think this would be one of the sector where again maybe next year then again we would see a good outperformance. Among the stock specific, yes, Hindalco definitely looks quite positive. 180 185 range is a very strong support for this stock, so we don't see stock going immediately below that. Would like to buy it on dips if it comes around 180 to 185. Well, other names from the sector which looks quite attractive at current levels is Vedanta and Cain India. Probably these are the stocks, even these have consolidated, shown a good amount of consolidation. And Cain, Vedanta both have attracted very good volumes in the recent past also during this up move. So we could see a good outperformance within this space coming in from Vedanta. So if in fact from next 2 to 3 months perspective, I think this is a good opportunity to buy these stocks even at current levels.
Well, one space which is buzzing today is the fertilizer space. Let's just pull up these fertilizer stocks. Deepak Fertilizers trading higher by 3%. It looks like there is some cabinet meeting which is supposed to take place today. In fact, fertilizer and chemical, that stock's also trading higher by close to 8%. So all your fertilizer stocks are trading in the positive territory, from the likes of Mangalore Chemical, UPL, even the National Fertilizer stock. All of them are actually seeing good amount of gains coming in there. Sanjeev, we will be implementing GAR with effect from tomorrow. Do you see any impact on FI flows coming about? Because this March month has been pretty much strong. FIs entered the party late because initially it was only about the domestic institutions, the 1,000-point rally which we saw in Nifty. But as GAR gets implemented tomorrow, do you see any kind of rejig or any kind of change in the FI flows?
Well, no, I think all of that has got adjusted. They had ample time, and we know that the P-note way now is more or less going to be history. It is all going to be on your KYC because it will see reduced cost of holding and more transparency. And I think there was adequate time given. Now you have to chase a bull market. There is such a huge left out feeling, like you pointed out. From being net sellers in the last 4 months, in this month itself you have bought almost half of what you sold. So there is no reason for negativity as far as a tax change goes, and I think they've learned to live with that. All we have to realize is that even the rupee against most naysayers of 70, you breached even 65, which even I have been caught flummoxed. 65.50 was where I thought the bottom was. So it's telling you the extent of under ownership and the relative strength of the economy, which can actually bounce back faster than most expected in the second half of 2017.
Right. And Sanjeev, I'll ask you about some importers and if there could be more cheer for them going forward. But before I do that, just a call on an RIL. Today is the last day that the Prime membership plan ends. There are divergent reports with regards to the kind of response that this one has got. But all indications are that possibly it may not be as optimistic as was anticipated when the monetization plan was announced. Brokerages have significantly raised their target on this one. It saw a big breakout when the news came in, but been in a range ever since. What's your call on an RIL from a one-year horizon?
Yeah, so we had a target of 1250 initially to start off with, but that got met in hardly any time after the strong response of Jio. The thing is, RIL now becomes a very complete play on the GRMs, on the gas refining, on the shale gas, on the petchem, and given that oil is now starting to perform well, I think there is no reason that RIL should not be a market outperformer. We think if the Nifty has to go to 10,000 and beyond, then Reliance will be 1500, and we see any opportunity, any decline for any reason of small aspersions on the Geo side, I think that will be a buying opportunity because the larger businesses are doing excellent. So we recently also upgraded ONGC at this 183.85. We think in both these upstream companies, they could outperform on the energy basket going into the second half of 2017.
All right, that's the view coming in on Reliance Industries. Let's quickly do a check on these F&O stocks which have been included. Majority of your gainers are the new entries. You've got Equitas, which is doing pretty well today. In fact, Indigo is also trading higher by 2.7%. The other entrant was Piramal Enterprises. That too is trading in the positive territory. And Indian Bank has also been included there alongside Dalmia Bharat. So most of these stocks are trading in the positive territory. Ashish, you were talking about RCF, I believe, which is at 6-year high.
So RCF looks very interesting. If you look at in last 3 days, volumes have picked up significantly and stock has crossed almost 6 years high. So clearly indicating that after strong consolidation in a range between 74 to almost 44 on downside, now this stock is poised for a move towards 105, 110 levels. So I think another 20-25% upside could be seen from current levels. In terms of downside, I think one should keep a stop below 72 for an upside target of 105, 110 levels.
Ruchit, what about you? Any interesting trades that have caught your eye in the first 10 minutes of trade?
Yeah, I think one of the stock which has been recently included in F&O is a Capital First. No, this stock seems to be very attractive, at least from intraday or 1 or 2 days perspective. The stock already has been forming this high top, high bottom structure. I think one can look to go long with stop loss below 730, and we can expect levels beyond 800 in very short term. Apart from that, fertilizer sector, as I said before the show also, that it is expected to show some good outperformance. I have already recommended GNFC in today's trading session, and also Chambal Fertilizer, RCF. These are a couple of the names which are Chambal Fertilizer is showing a good breakout after a consolidation phase. So we can see a good momentum in next couple of days in fertilizer sector as a whole. So traders, specifically intraday or those who do swing trading, should look to focus on the fertilizer sector from short-term trading perspective.
Right, and you've also got the rice stocks which continue to do well. Yesterday again they were up, and today once again that buying momentum, follow-on buying continues. LT Foods is trading higher by close to 6%. You've got stocks like Kohinoor Food and KRBL. All these stocks are trading in the positive territory. Well, clearly the reason has been that the imports to Iran, they have started, and also the realizations this time around are expected to be better than the last 2 years. Sanjeev, before we let you go, well, a lot of retail investors may be feeling left out with the kind of rally which we've seen for the markets. What would you advise to them? Are there any stocks from the broader markets which look good to you to enter at current levels?
Well, yes, if you recall about a month back in February, we actually put out a call on some of the white goods players, and we thought they would have a superb time given that remonetization, consumption-led spending, and a very hot summer. And those stocks have moved up 30%, Blue Star, Voltas, Thermax. We would recommend any declines to buy. We are also very bullish on Indian Hotel as a standout in this implementation of GST. Rallies India, you were just mentioning fertilizer and agrochemical. This is a blue chip which has actually started to turn. It has 19.5% share in the agrochemical markets. We think This stock could give you 275. Tata Global is another topic, and recently included, we think Equitas is one stock which on the microfinance disappointed on the numbers front as far as asset quality in the last quarter. But I think given the pedigree of the management, Equitas is something which we can be overweight for a target of 180 by the end of the year.
Sanjeev, always a pleasure to get some ideas from you. Thank you for joining us this morning. Ashish and Ruchit, thank you for being with us. That's the market setup for you. And like all our guests are saying, fertilizer could be the theme of the day. As Ashish just mentioned, RCF sitting at a fresh 6-year high on that one. Keep an eye on that, as well as some of the other fertilizer stocks that are buzzing in trade at the moment. Let's take a very short break. Come back with market guru Pashupati Advani on the other side.